Crowdfunding has revolutionized the way people invest, allowing everyday individuals to become wealthy without ever having to lift a finger. Trust me, this is not too good to be true. The company we're talking about today, Realty Income, not Reality, has made its investors quite rich since their IPO in 1994, and I have the receipts to show it. Always at 52-week lows, it has an absurdly high starting dividend yield of 5.5%, but is now the time to dive right on into more shares of O. Before we get into that, let's talk about the benefits of real estate investment trust. So REITs are a popular investing vehicle for those who want exposure to real estate, but don't actually want all the headaches of being a landlord. REITs are required by law to distribute 90% of their taxable income in the form of dividends to their shareholders. This is why it's actually quite normal to see REITs with a really high payout ratio, because by law they need to do this and reward us, the shareholder, in order to get those tax benefits. Secondly, diversification with REITs allows you to invest in a wide range of real estate sectors, and you're definitely getting that with Realty Income, owning a ton of commercial real estate across the United States. Our next point is that REITs are really liquid. Owning physical real estate yourself is very illiquid. If you need the money really quick, good luck on hiring an agent to sell it and finding a buyer, doing renovations, negotiating. You have to do all that in a short amount of time. With REITs, your ownership rights can be easily bought and sold any single time the market is open. We also get a professional management team. You have people that will handle all the property acquisition, research, management, maintenance, and all those other burdens you get excused from since you are just a passive investor. I love how passive REITs are, and I don't need to worry about dumb tenants and lawsuits. Then we also have transparency. REITs are required to provide financial reports and disclosures every single quarter, which get audited by those pesky auditors like me. This means unlike those backdoor dealings you're doing with Hunter from down the street, REITs get audited for compliance and verification. That way they're verifying what the companies are putting in their financial statements is true. We also get accessibility. You can buy shares of Realty Income for just under $55, and right away you get ownership of 12,000 different properties. Rather than having all your eggs in one basket, REITs provide diversification, so it doesn't matter if you're a brand new investor or a seasoned vet. And REITs, they're for everyone. You might even say it's a human right. And then of course we have capital appreciation. REITs, just like regular stocks, can go up and down in share price. Real estate has historically acted as a great inflation hedge, and rental income and property values, they tend to go up with inflation, so you're protecting your purchasing power with these investments. Alright guys, those are just some of the pros to REITs. There's obviously going to be some cons as well, like some people like to be more hands-on. The gains or losses can be bigger doing real estate yourself, but I personally think the advantages of investing in real estate through REITs severely outweigh the disadvantages. That's why I own so much in REITs. Let's get into more facts about Realty Income. So they currently support those monthly dividends with long-term net lease agreements with over 13,000 properties around the world. They have been in business since 1969. That was a very nice year, and they have declared 637 consecutive monthly dividends, which has increased 121 times since their IPO in 1994. Their portfolio has over 1,300 different clients in 85 different industries. Guys, we're talking about convenience stores, grocery stores, dollar stores, home improvement, restaurants, gym, backed by great tenants like Dollar General, Walgreens, Dollar Tree, 7-Eleven, FedEx, LA Fitness, BJ's. And just take a look at this amazing portfolio occupancy rate over the past 30 years. It's constantly hovering around that 97 to 99% range. Even during C19, it was at a mind-boggling 98% occupancy. All that to say that O doesn't have a hard time finding tenants for its properties. And all that consistent cash flow O gets every single month with normal commerce and day-to-day activities happen. And by normal activities, I mean walking into the store and stealing whatever you want, because you know there's going to be no consequences in 2023, and then we all pay higher prices as a result, and companies report billions of dollars in inventory shrink because of all the shoplifting. So that normal business activity, that's income that O gets to send us every month in dividends. They have done an amazing job of paying out increasing dividends over the past couple decades. I can sleep very well at night knowing my dividends are very safe with O. Plus, Realty income is still growing. It just invested nearly $1 billion into the Bellagio in Las Vegas in a partnership with a great ethical company in Blackstone to have a joint venture with that casino. It also invested $1 billion to fund vertical farm developments, so anything we can do to stop Billy Gates from his world domination, I'm all for. But at the same time, we have to ask, why is O down almost 14% year to date when the market itself is up 17%? That's a 31% swing. While it has to do with higher interest rates, real estate as a whole has been down in 2023. Successful real estate companies use debt to finance property acquisitions and development. So when interest rates increase, so too does the cost of borrowing, and that's really going to hurt O's profitability. That's going to eat into the income generated by rental properties and the overall return on investment. Also, just keep in mind, in general, when interest rates go up, that makes savings accounts and money market funds more attractive, so people will generally move money out of the stock market into safer, less riskier assets like those savings accounts or those money market funds. Money market accounts these days are yielding well over 5%, which is almost the yield O is giving us, but O, of course, you have that risk of your principal going up or down, and at the end of the day, I guess dividends, even with Realty income, they're not necessarily guaranteed. Another thing about Realty income is that it's gotten so big that it becomes that much harder for acquisitions to move the needle in terms of growth. When you're a $40 billion company, you need to do a lot of activity to get that double-digit growth you were getting when you were a $2 billion company. So that's also going to spook away some investors who potentially want that chance at bigger capital appreciation. So yeah, if an investor wanted a chance at giant capital appreciation, maybe O isn't the best choice. But for me, I love slow and steady. And I just want them to keep expanding like they're doing, especially in Europe right now, and I want them to just pay me those monthly dividend checks. I got plenty of other options in the stock market in my portfolio to chase that growth. I need the monthly dividend company for my monthly dividends. That's why right now I'm loading up the truck, guys. I'm buying O almost on a weekly basis. I'm up to nearly 80 shares of O, and I might be down right now in total return, but I'm a patient investor. I know once those interest rates come back down, I'm gonna get rewarded for all this buying and for all my waiting. In the meantime, I'm making almost $20 a month in passive income from O's dividends. Once I hit 100 shares, I can do covered calls and start making that much more in passive income. If you think a 5.5% yield is too low, you may like YieldMax's 70% yield. Check out the pros and cons to those funds right here. Alright guys, I love Realty income. I've been an investor for over 5 years, but I know it's not for everyone. Let me know what you think of real estate in the comments below. My videos are always found in podcast form under the Collect Cash podcast name, and I really want to thank all my Patreons for making this all possible. They get to see all my trades every single week, and I'll catch you on the next one.